All right. Hello, everybody, and welcome to Wednesday Night with Leon Noble and myself, Brent Simpson. We are the co-founders of Investing Education Academy. There's a lot of talk around digital cryptocurrency. What is it? How does it work? And people are starting to figure out, okay, Bitcoin, Ethereum, like we know these names. But now we're starting to hear more about altcoins and also NFTs. That's been a really hot topic. What are NFTs? How do they correlate to cryptocurrency? Are they a currency? Aren't they a currency? Who can sell them? Who can buy them? How do you make them? All types of questions are just floating around NFTs. So Leon and I decided to talk to you about it. And there's a deeper reason why we decided. And while I do what I always do, a little bit of maintenance, Leon will tell you why we chose the topic NFTs.
Yeah, so we chose. So unless you've been under a rock the last 3 months, NFT, you probably heard of NFTs in the news. And the crazy thing about NFTs, Joe, is like anytime you hear NFT, you hear multiple millions of dollars that a quote unquote NFT has been sold for. And so people are always like, what is this NFT? Is it cryptocurrency? Is it not cryptocurrency? Is it real money? What is an NFT? And we're going to go deeper into that tonight. But the reason we're talking about NFTs tonight is because NFTs are a bit of an extension of cryptocurrencies. They're not exactly cryptocurrencies, but they live in that same world. But they're not actually, they're not like Bitcoin. They're not like Litecoin. They're not like Ethereum. But they're like a step cousin of them. And
you really call it a step cousin?
I mean, step brother, whatever. Yeah. Sister,
step cousin.
Yes, it's just a step brother, sister. Yeah. But they have a close relationship to cryptocurrency, but they're not cryptocurrency. And a lot of people, and I was confused about NFTs up until I did this research. I dug a little deeper on how they work and what exactly they are. So we're going to go into what NFTs are tonight. And Brent, you can pull up the first slide when you get a sec.
Right. And while I'm still doing this, because the algorithm always changes and it takes different like engagement to do this, which is always fun. But NFTs, for those of you all who don't know, and I don't want to go into the content, they were actually birthed through Ethereum. And so that's one of the reasons why Leon called them step cousins. And as we talk about it, this is a good one where if you have questions or there's something extra you want to know, or you've always been wondering about NFTs or cryptocurrency, this is a good one to share. This is a good one to tag a friend, because a lot of us have been nervous to get in it by ourselves. So we provide these conversations for you all so you can bring your community in, have the discussion, talk about what it is, what you felt like it was and what it actually is, and with us. And we can answer the questions real time. So please take advantage of this moment. And let me pull up the first slide. Give me 1 second.
Yeah, with NFTs, like I said, the crazy thing about NFTs is that people are literally making millions, if not hundreds of millions of dollars selling these NFTs, right? And to now go a little deeper and say what NFTs are. So NFT, the letter NFT, stands for Non-Fungible Token. And I was listening to a webinar a few days ago where it was kind of like experts in the crypto game, and they were saying how that NFT is the stupidest name they could have ever given what these are, because NFT, non-fungible token, doesn't describe let me take it back. Okay, he was saying it doesn't describe it at all. I feel like it does, but in trying to convey what this thing is, it's a horrible name. It's a horrible marketing name to try to bring up something new.
Yeah, and just for anybody watching, just replace the word fungible with transferable. It simplifies the process. It makes it easier. They use these complicated names for no reason.
Right. Yep. Yeah. Fungible, which is transferable. So as we have a slide up on the screen now, and with four bullet points. So the first bullet point is NFT stands for non-fungible token. Second bullet point. So like I said, a lot of people think that these NFTs are cryptocurrency. They're actually not. So contrary to popular belief, NFTs are not cryptocurrency. They're not all. Cryptocurrencies are things that are that you can buy and sell different items with, all different types of of products. They can be physical products, they can be digital products. You can exchange cryptocurrencies one for another. You can do all types of things. With NFTs, you cannot do that because it's not current. Third bullet point is NFTs
I know, right?
are more like a proof of ownership, right? So if you go, so I'm gonna give you an example, right? So so this is crazy. I couldn't believe this, but so recently, the founder of Twitter, Jack Dorsey, he sold his first tweet, and the first tweet ever in history of humanity. He sold it. It was a tweet of him saying, "Setting up my Twitter." Just a few words. That was the first tweet ever. He sold this tweet for $2.9 million via NFT. Now, what does that mean, right? So as we say in slide in bullet 3, NFT is really just a proof of ownership that is stored on a blockchain. So when this individual who paid $2.9 million for that tweet, they now legally have they're now legally the owner of that tweet. Now, my question always was, why does that matter if the tweet is still going to live on Twitter? Anyone can go look at it. Anyone can go, copy it, alter it. They can do whatever they want with it because it lives in a digital space. The explanation I got was that all that's true, but with these NFTs and buying and selling digital products, they're worth what people are willing to pay for, right? So even though I don't see value in that tweet at $2.9 million, somebody did. Somebody saw that it was worth $2.9 million and paid for it. Now the NFT portion of it, that's now stored on, as Brent said, in an Ethereum blockchain that says that individual is the rightful and sole owner of that tweet. No longer Jack Dorsey, no longer Twitter. That individual who paid $2.9 million for that tweet is the sole owner of that tweet.
And Leon,
again, it lives in a digital space, and we can all mess with it, but he is the rightful owner.
Yeah, and so that's considered commodifying a digital asset. And for any of you all who are wondering, like, what is the process? With the NFTs, you commodify a digital asset, which means you basically convert it to a commodity, and it creates the store value, if you will. And similar to the slide where it's talking about proof of ownership, you should know a slight history of the NFTs. They originally started on Ethereum's platform. And if any of you all are in the digital currency, and this is actually, I'll say this live for us is sponsored by IEA Crypto Bulls, which is coming soon. We are creating a division that is going to focus on cryptocurrency, like in a completely different format than IEA, and it's going to be called IEA Crypto Bulls. And we're working on everything behind the scenes now, but it's going to include masterminds, weekly calls. We're going to have some assets available to help you learn with this market. But it's more of a conversation of masterminds than it's going to be an educational platform. We're going to be moving fast. This is going to be for people who really want to get in, start investing, learning, sharing their knowledge. But to go back to the history of these NFTs, where we talk about proof of ownership, they originally started on Ethereum, and then it was Bitcoin Cash, and then a platform called Flow. And when Leon's talking about the ownership piece, when NFTs were put on the Flow platform in particular, that blockchain, that ledger system, because that's all it is a ledger system. That ledger system actually has rules to it where Ethereum and Bitcoin Cash do not. And so Ethereum and Bitcoin Cash, which is one of the things Leon and I both talked about, like, why does it matter if a person owns this digital representation of the artwork? Because right now, as it is today, the owner of the artwork still has the right to resell it. And on the first two platforms, Ethereum and Bitcoin Cash, they also have the right to create a new coin for that NFT. If they're on the Flow platform, they actually are restricted from doing so. This is why most people, when they release their NFTs, they're putting them on the Flow platform. And the original Ethereum platform was like ERC-721, if you want to look it up. And that was like 2015, the original NFTs hitting the marketplace. But these digital assets are, I mean, what Leon said, there are buildings themed, people are buying it for insane amounts of money. But also too, one of the reasons why it is such an amazing thing is if purchased properly and there is no ability to recreate the NFT, another token for that same piece of artwork, that's when the value really increases. although there's no physical transfer of the asset to the person that owns the NFT. And everybody should know that. If you're thinking, oh, I bought the NFT, I own the artwork, or and NFTs actually can go for music, digital artwork, just in general. I think it's video games, and that's really the bulk of what they use.
And anything that any digital asset, anything that's digital can be sold via NFT.
Yeah, and so other creative digital works. Let's just put it in that category because it covers us, right?
Right.
So just understand, just because you own an NFT doesn't mean you own the actual physical artwork, and the artist still has the ability to resell it. And pirating is happening all over the place because so many people are new and still don't understand NFTs. That is kind of a little bit of the Wild Wild West. So the Flow platform is one of the best ones to get a secure piece that has regulation around duplication of it.
Yeah, it's like Mercer said, it's a complete Wild Wild West. People are paying. I mean, the one I heard the other day, I think the artist's name is Beeple, something like that. This is some digital artist. Somebody paid $69 million, again, via NFT, which means that whoever bought it has the rights stored on a blockchain. They're the sole owner of this digital artwork. Pay $69 million for a piece of digital artwork. $69 million. Heard the other day also that this artist, created a digital house. It had no kitchen because, of course, you can't eat in it because it's not real. Someone paid $500,000 for this. Again, via NFT, which means, again, they're in the digital world, they're the sole owner of that digital art. To me, it's still hard to get my head around because I'm a child of the 80s and I understand physical money and physical things. Owning something that, well, okay, so here's a quick example. Somebody, I heard this on, actually, I think it was a guy, Beeple, the artist. He was saying, all of us can go online right now and look up the Mona Lisa, right? We can all look at pictures of her, of the artwork. We can download it. We can alter it. We can do whatever we want. But none of us own it, right? Whoever owns the Mona Lisa, sitting on tens of millions of dollars. But on the digital side, we can mess around with it, but we don't own it. And he was saying the same thing with NFTs. You don't own, like you can go online and look at that tweet that Jack Dorsey produced years ago. And you can look at it, you can download it, you can play with it, but you don't own it. If whoever owns that the NFT owns the right to that tweet and now can do it with it what they want, which we cannot. So that's kind of a way to think about it. But again, this whole digital realm to me is it's all new, it's all kind of weird. But as somebody said to me the other day, he was like, "Look, if someone's willing to pay that much money for it, that's what it's worth." So that tweet was worth $2.9 million. This virtual house, again, that you could just look up on a website, all of us can go look at. It was called the Mars House. Figure the name. $500,000 somebody paid for that via NFT. So last point on here is just saying that when you buy the NFT, when you buy something via NFT, that NFT can only be used, is only good for that asset you bought, right? So it's the person who bought that home, that digital home. The NFT is only for that, right? You can't take that NFT and now try to exchange it for Bitcoin or try to exchange it for another piece of artwork. That proof of ownership is only good for that particular asset you bought. So in a nutshell, that's what NFTs are. I'm still not. I mean, they still confuse me too. I get the concept, but in reality, I'm still not a fan of them. But I get it. It's real money out here going with these NFTs, and so it's a game that we can play in also because you can bid on things via NFT. You can sell your own artwork via NFT. So it's a way for us to make money as well.
Yeah, and the importance of the stock market and understanding this cryptocurrency world, things are about to start moving a lot faster in our economy as a whole. And if we're all tied to these, especially, let me look at especially those who are tied to, well, I'm gonna keep my money in a CD, or I'm gonna keep my money in a savings account, or the bank just offered me a bond, or whatever it is. Those of you all who believe wholeheartedly in that, and those of you all who maybe have parents who believe in that, help them move into the 21st century, because we are at a place now where money is going to become extremely faster. Leon and I probably over the last month, and I don't even know Leon's portfolio back and forth, but I can tell you between crypto and the stock market, we probably both made at least 25% in the last month or so. And if our money's growing like this, I mean, we really do hope you all pay attention to these lives. And we really hope you all are paying attention, like join the IEA. And we're not saying it because it's just good hype and it's going to make us money. If you talk to investors inside of Investing Education Academy, most of them who had that transformational experience will tell you their money is hands down blowing away what they were doing before becoming members. And the next thing is this cryptocurrency marketplace, which is why, Leon and I are coming out with IEA Crypto Bulls, because it's a different kind of money movement, and it's going to be faster than the stock market. And it's also, the rules are going to change very fast. And if you don't understand the rules and the risk involved in it, you can end up chasing ghosts. And I promise everybody, like, we do these lives really as a PSA. We don't ask for much. We're not doing any like come out to our worst. We will at some point, you'll hear it. But for the majority of the time when we do these, it's strictly to help the community move into a place where their money becomes their employee. Like, that's what we want. That's what we're hoping for. And coming out of COVID, when some of the government assistance goes away to regular way of living. And also, let me say this, when consumer goods, the pricing for consumer goods catches up to the rate at which people are making money now, there's going to be a new level of poor. And it's going to be drastic. If you aren't changing your mindset, the way you invest, the way you look at your money, your relationship with your money, you're going to be in a situation where, I don't know, we'll pray for you. But
yeah, I was just on that point. I was talking to an IEA member earlier today, and all of us who are in the market know the market's been really volatile the last month or so. And his portfolio was down some, over the last couple of weeks. But he said, even with the recent volatility and his portfolio being down some, he's still up 22% in his portfolio. And there's a portfolio he's only started since he joined IEA. So over the last 6 months, even with the market being down some last month, he's still up 22%. And this is an individual who I know for a fact only had his money in a savings account. So he's gone from 0.05% interest to now 22% in a down market in the last month. Yeah. So again, yeah, we always say that's the power of joining. If not IEA, join something where you're a Facebook group or whatever, where you're around these type of discussions all the time. Things like NFTs, things like crypto, and of course things like the stock market.
Yeah. All right. So we owe you all some picks, and for those of you all who want to join us on Clubhouse, we will be going over to Clubhouse after this. We more than likely will set up a room called IEA money, stocks, cryptocurrency, all things money. I don't know. Look for Leon Noble and Brent Simpson. You'll find us there every Wednesday, right between like 9:45, 10 o'clock. We try to make it over there. It looks like we're going to finish early today, so we'll probably be on Clubhouse early today. So we definitely want to have a good conversation. And again, we're telling you all this because we care. Some of you all have never heard of NFTs listening to our podcast, or those of you all watching us right now. And some of you all will casually just move this live to the side. Some of you all will do some research and maybe not get involved. Take this information very seriously. And if you know any IEA member who's really been in the ecosystem and started changing the way they look at their relationship with money, ask them what the environment feels like. Ask them, what has changed about their money and where they put their money. And more than anything else, and this is, again, something Leon and I talk about, the mindset that IEA members have after becoming members of the organization or the group, you can't take that away from them. We can't take that away from them. It doesn't matter if they stay paid members forever or not. They will always look at their money differently. And that's the win. That's the transformation. So like Leon said, whether you're getting it from us or not, just please, everybody. Again, we always joke, but one day when we're doing these from a boat and we're like, hey, I don't want people like, oh yeah, those guys. Like, we're trying to bring as many people up with this as possible.
Right.
So, that being said, all right, let's give you our picks. I will go first because I already have it up. Right. So I picked the ETF today, and it's Defiant Quantum ETF. And it's currently trading under the ticker symbol QTUM. Again, the ticker symbol is QTUM, Defiance Quantum ETF. It's currently trading at $45.41 as of the close of business today. As of the close of the stock market today. That is is down roughly 51 cents, which is 1.12% for that. So I made some notes on it. And this deals with quantum computing. Leon, myself, and David Curry from Short Optimize were talking this weekend, and quantum computing came up, which made me just kind of curious about it. So I started doing some research. Right now, quantum computing as a sector accounts for $600 million. So I want to say that again. As a sector, right now, quantum computing accounts for $600 million. It is estimated to be a sector that up to $65 billion by 2030. Please understand how much growth there is in this market space. I'll say it again. Currently, this at 600 million for really as a sector. It is estimated to be valued, it's going to be valued at around $65 billion by the year 2030, which is only 9 years away, everybody. There's not a long time. This company in particular invests in, it tracks the Blue Star Quantum and Machine Learning Index. That consists of about 60 globally listed stocks across multiple sectors across the world. As global computing becomes more and more competitive, you're going to be seeing people in the lead like Intel, Microsoft, Google, Amazon, Qualcomm might slide in there. And then there are a couple companies in the Asian marketplace, which will account for a large sector of the new technology being released from the quantum computing sector. China is in the lead as it relates to quantum computing right now, but quantum computing is going to change everything. It's going to change autonomous cars, how AI works, how we engage with our computers, the speed. One of the biggest issues they have right now is the amount of energy required to actually run a quantum computer, and they're worried about carbon footprint. So it's not growing as fast as the technology is allowing, but they're worried about the environmental risk from just the sheer need of energy to run the system. So for the ETF, Defiance Quantum, currently net assets account for $88 million. It's not a lot. This is actually a small company, and it's a small fund. Understand, we have introduced some funds or some stocks to you all that have market caps in the area of $200 billion, $150 billion, $10 billion. This is 888 million market cap. Like, please, this is going to be a really, and I think 2018 is up over 100%, 100 probably 120% rate of return since like 2018, 2019. I think it's 2019. So this is not probably going to be the fastest running stock that you own, or ETF, electronically transfer funds, in case you don't know what ETF stands for. But it's going to be one I think most of us should have in our portfolio, and we should have exposure to this sector because it's going to be a really hot sector. All right, Lee.
All right. Yeah, and you ask anybody who's in computing, quantum computing is the next big thing. So yeah, that's definitely what I'm gonna look at too. My pick is Penn Gaming, ticker symbol PENN. They're a gambling casino operator. So I'm just gonna read for you what they're about. So they operate 43 facilities in the United States and Canada, many of them under the Hollywood Casino brand. The company also controls 36% stake in Barstool Sports, if anybody's familiar with Barstool. Interesting tidbit is that they just joined the S&P 500 this week. So of course that means that all the funds around the world that track the S&P will now have to buy would have to buy Penn Gaming, which is kind of a tailwind at their back. Just some recent quotes from the CEO. He recently said, what we're seeing right now in the business is revenue and volumes that haven't been seen in years. The month of March has been incredible. So what he's saying basically is that as economies reopen, they're starting to see people flocking back big time to their casinos. Next quote was, what we're what we're seeing now is the spend per visit was still much higher. It was still much higher than it was pre-COVID. So what they're saying this month and people were spending is higher than before COVID hit. So again, it's that pent up demand we were talking about. Everyone wants to get out and travel and have a good time. They're seeing a lot more revenue coming in the door per user. And finally, they can offer, because they own 36% stake in Barstool, they can offer online gambling via the Barstool app. So they have physical locations and they have the online virtual gambling via Barstool. So I'm only going to quote 2017 through 2019 because I realized everyone's revenue and profits, all companies' revenue and profits in 2020 was crap, right? I mean, everyone's was just garbage relative to what it usually is. So 2017 through 2019, their average revenue growth was 22%, and their average profit growth was 5.3% for 2017 through 2019 on average. And as of today, the stock is down 27% off its recent high of 142. So it's trading at a serious discount to what it recently ran up to. You know, me, I'm all about Mr. Pullback. So I'm definitely eyeing I'm eyeing Penn right now because of the 27% drop it's had recently.
But like, even with the 27% drop, it's still up over like 100% of its price point in 2020.
Oh yeah, dude. Yeah, this thing was a complete rocket ship from bottom to top. Yeah, I mean, it's down 27%, but that's nothing compared to where it came from.
Yeah, let's see. Please, everybody, pay attention to that. We're talking about a company that's down 27% and still up over 100% over the last 16 months.
Right. Yeah, it's like, why would I pick a stock that's down 27%? Well, like Brent said, you have to look at it relative to where it's been recently. It's actually up like 100 some odd percent from the March lows last year, if not more. So the 27% is a blip. And this is as we're going into economies reopening. And as the CEO said, they're seeing a huge spend in their casinos and online versus what they saw in 2019. So and I kind of equate this, like I picked DraftKings a couple months back. That's my number one gaming stock, but I think this is number two for me. Penn, PENN is the ticker symbol.
Yeah, and also too, just with this, understand that, you know, you say, why would we introduce a stock that's down 27%? Even if it weren't up 100% over the last 14 months, 16 months, including it being that 27% really just pulled back. Even if it were simply down 27% only, that's a buying opportunity. And when you see these stocks down, don't think of it like, oh, it's a loser, I'm not getting into that stock. This business, like investing in, some companies are cyclical, and some they just have just normal trends, normal times of year. Some normal times of year for some, normal years for other. Like some stocks every 5 years just has a pullback because investors, inside trader, they sell off. It just happens every 5 years. I don't know why. That's their cycle. Others are like, you know, before Christmas, during tax season, this is a pull out. People are trying to pay their taxes. They're pulling money out. And this particular type of stock, because it really has a high appreciation, is where they normally draw money from, where others pull money from dividends. Just my point to saying this, which is kind of not to confuse you, but just understand stocks have behaviors. And when you understand the behavior, you will understand that these dips really don't mean as much as they seem or emotionally feel like they're how important they are. They're not. They're actually great buying opportunities. These are moments where, you know, Warren Buffett always talk about when people are running away, I want to run towards. When people are running towards, I want to exhibit caution. So,
yep, yeah. and like we're saying, and also you got to look at the fundamentals too, right? Because they're growing revenues at 22% and growing profits at 5.3%. It's a growing company. It's a growing company that's profitable, and we're going into reopening of the economy. So you know, great buying opportunity. People like the CEO said, they're seeing revenue per user being above before COVID hit. So again, that shows that, you know, and I also want to say the last point is that also remember that there is $4 trillion with a T, $4 trillion right now sitting in Americans' bank accounts because nobody could spend during the pandemic. When that money is unleashed on top of the $2 trillion that was just passed by Congress, man, the stock market should, I think guaranteed, the stock market should go bananas the second half of this year. You know, we'll see, but that's kind of my prediction. As well with the economy in general going bananas.
Yeah, and I think probably with that, I would agree. In around December, you're going to see a precipitous drop, because there are going to be a lot of people who weren't used to getting that kind of money doing profit taking. So right around December, it's going to be a lot of people who ran up. I think if I had to guess right now, I think between November and December, you're going to see maybe a 14% or more drop in the market, but it's going to come right back in 2022.
Mm-hmm.
So with that being said, again, NFTs, non-fungible tokens, you really need to spend some time, look at it, understand it. IAA Crypto Bulls is coming. When IAA Crypto Bulls hits, again, it's going to be a mastermind. It's going to be fast-paced. It's a different platform from IAA as it is right now, because it's going to be solely focused on the cryptocurrency market space, and it's going to be some of the more people who are more familiar with cryptocurrency investing are going to be in this platform. And it's not going to be the one where you walk in and Leon and I are just running the show. It's going to be a true mastermind where everybody who comes in is going to be offering their piece to really move their money ahead in a fashion that is probably going to be pretty unique to the cryptocurrency marketplace. And I mean, also too, I gotta say this: you're talking about a marketplace less than 20 years old.
Imagine, almost less. I mean,
I was gonna say
20, it's like 12, because I mean, Bitcoin was quote unquote founded in 2008, 2009.
Yeah, so, but they said the technology was out first. Bitcoin wasn't actually the first coin.
Ledger blockchain, it was out, but but as far as cryptocurrency itself, the market, it's like 10, 12 years old.
And so, in that space, imagine somebody telling you about the stock market when it first started.
Right.
That's all I can say. We've said it a million times. The chart goes bottom left, top right. And just take it seriously. That's all we're going to say. So if everybody wants to join us in the house, feel free to join us over there. Everybody who shared this live, who stuck around and listened, who is going to have that conversation with family and friends afterwards, truly, we're happy that you're doing it. We're happy you're making that change and you're turning your money into your employee. We will see you very soon. And of course, you can always go to IEAnow.com and become a member of the IEA community. Have a great day.